In this session, we are going to see the basics of cost accounting. To start with, the definition of costing, cost accounting, and cost accountancy. First one is cost. The term cost represents the total of all expenses incurred, whether paid or due, in the production and sale of product or expended in the rendering a service is called as cost. Costing, the techniques and process of ascertaining the cost. Cost accounting, the process of accounting for cost which begins with recording of income and expenditure and ends with preparation of periodical statement and reports for ascertaining and controlling the cost. Cost accountancy, the application of costing and cost accounting principle is called as cost accounting. However, in common, the term costing, cost accounting, and cost accountancy are used liberally and interchangeably. Objectives, functions of cost accounting. Ascertaining of cost. The basic objective of cost accounting is to ascertain the cost of the product, job, or service. Second objective is control of cost. Cost accounting is to control the cost so that the maximum and better production at minimum cost may be made possible. Reduction in cost. Costs are not only to be controlled, but constant effort is to be made for reducing them. The cost reduction implies real and permanent reduction in the cost of goods manufactured. Cost accounting provides cost information on the basis of which selling price of a product or services can be determined. The profit of any activity can be ascertained by matching the cost with the revenue of that activity. Cost accounting is an essential tool for management to formulate operating policies. Cost accounting helps in decision making processes. So, these are the objectives of cost accounting. Discussing about the differences between financial accounting and cost accounting. The deficiency suffered by financial accounting procedures and the techniques developed by costing to make them up themselves constitute the distinction between the two. Some of the important points of differences between financial and cost accounting are the purpose. The main purpose of financial accounting is for external use. The reporting of financial accounting will be mainly useful for the owners, creditors, government, and the prospective investors. But in case of cost accounting, it is the main purpose is only for internal use to the management of the business. It will not be useful for the external. Next, the coverage of the transactions. In case of financial accounting, it covers all the commercial transaction related to some particular period. Whereas in case of cost accounting, the transactions are identical to a manufacturing and a sale of a product and services, not for a particular period. Statutory requirement. In case of financial accounting, some countries look it as a statutory requirement for the purpose of filing tax, whereas in case of cost accounting, it is not obligatory. It is obligatory on the part of the industries to maintain the cost accounting. Analysis of profit. In case of financial accounting, it discloses profit for an entire business as a whole. Whereas in case of cost accounting, it is possible to show the profitability of each and every product, each and every process, and each and every operations. Analysis of cost. Expenditure is analyzed in terms in item wise. In case of financial accounting, expenditures are analyzed item wise. For example, wages, salary, depreciation, like that. Whereas in case of cost accounting, the recorded expenses are on department wise or a product wise. So it is easy to analyze the cost. Next is figures. In financial accounting, it deals with actual facts and figures, whereas in cost accounting, it deals with facts, figures, and partly with estimates. Valuation of stock. In financial accounting, stock are valued at cost price or market price, whichever is less. Whereas in cost accounting, stocks are valued at cost price. The duration of reporting in financial accounting is generally a financial year, once in a year. Whereas in cost accounting, it may be the reporting may be for a day, a week, or even on monthly basis. Pricing. Financial accounting, it fails to guide the formulation of pricing policies, whereas cost accounting provides adequate data for formulating the pricing policies. Evaluation of efficiency. In financial accounting, the information provided by the financial accounts is not sufficient to evaluate the efficiency of the business, whereas in cost accounting, the data helps in evaluating the efficiency of the business. Advantages of cost accounting. Cost accounting system has been fully successful in achieving its objectives. It is advantageous not only to the management but to others also. In brief, let us summarize one by one. First one, how far it is helpful to the management. It helps in controlling cost with specific techniques like standard costing and budgetary control. It provides information to the management to serve as a guide in making decisions involving financial considerations. Guidance may also be given by the cost accountant on lots of issues such as whether to buy or manufacture a product or whether to accept order below cost, etc. It provides information that enables the management to formulate production and pricing policies to prepare estimates of contracts and tenders. It assists the management in the control of stock of raw material, consumable stores, work in progress, and finished goods so that the capital locked up in these stocks can be kept to the minimum. It helps in introduction of cost reduction programs and ascertain new and improved way to reduce the cost. A good cost accounting system helps in identifying unprofitable activities and inefficiency in any form. The management is able to concentrate on profitable job and consider changes or closure of unprofitable jobs. Advantages to workers. Cost accounting introduces incentive wage schemes, bonus plans, etc., which will bring better reward to the sincere and efficient workers. When a bonus and incentive systems are introduced to the workers will give more productivity, which will in turn increase the profit. Creditors, bankers, debenture holders, it is more informative for them to provide the credential information to them. The report of the cost accounts helps them immensely to take right decision whether to lend or not. The proper system of cost accounting are great use in preparation of national plan, economic development, etc. Even it helps in price ceiling, where if government wants to price seal any of the product and it wants to seal it from import and export, for all these it is helpful. The public feels that the costing system facilitates the customers to pay a fair price. Development and prosperity in the industry will generate more employment opportunities to the public. So these are the advantages of cost accounting. Limitations of cost accounting. In spite of various advantages claimed by cost accounting, the discipline suffers from the following limitations. Many judgments which is made by the cost accounting is of biased nature, and most of the biased information, and it usually depends on the individual's discretion. So the assessment, the analysis which is made by cost accounting will not stand to be correct. There are different views by different cost accountant about the items to be included in cost. So it varies from cost accountant to cost accountant. It may not be applicable to all types of industry. Moreover, it is very costly to afford for cost accounting in an industry. So for it is not affordable for small scale industries, and it will not be suitable for all types of industries. So like any other accounting system, it is not actually the science. It is usually developed through the practices which is taking place. So cost accounting doesn't have it is not usually based on the science as we used to calculate financial accounting. There are standard accounting rules which is governed for financial accounting, whereas here there is no standard rules that we are supposed to follow.